every last one of you all to BYOB Market Talks. Welcome, welcome, welcome. And let's talk about our affirmations here tonight. All right, let's talk about our affirmations. Once again, this is Tasha Mdai, the Trade Whisper, creator of the BYOB Cash Out. And this is BYOB Market Talks. Now, you want to make sure what the mindset that you have, you want to make sure that your mindset is in the right mentality when you trade. Now, what I want to talk to you about tonight is it might take about 2 nights for us to discuss it. And so I broke this down to where I want you to understand some movement in the market tonight. That's the first thing I want to talk to you about. And then I also want to kind of talk to you about conditions and different things like that in the market. So as we navigate here this evening, and as we understand, I think that'll be great. The second part of this will be great to carry over into BYOB Market Talks. So as far as in the basic training, to understand the different types and different things as far as the market is concerned. So as we are navigating through this, the first thing that we want to have, because this morning on a call, we mentioned that we are in a political market. And so as you notice, the first thing you want to have is the right mindset. And I mean, we're thinking about a political market. While we're on here tonight, I want you to watch the indices, because we canceled for the debate last time, but it's not really a debate. If it was a debate, we wouldn't be having a call right now. But we would want you once again to watch the debate. But it's more like a town hall, which still can have impact on the market. This is a little different, so I don't know how it's going to impact the market. It hasn't been done like this before. So when we sit down and we talk and we think about it, the one thing you always want to manifest, and the one thing that you always want in your mind is you want peace. You want to sit down. You want to put yourself in the right mindset for, put yourself in the right mindset for your trades and the right mindset for that. So just as we do this call this evening, I still want you to kind of monitor them, because we had a nice drop. We had a nice drop last time the debate happened. Okay, so I'm just throw that little cliff note out there, the disclaimer. But once again, I cannot tell you what it's going to do or the direction it might take, because tonight is a little different. The debate night is definitely a little different, where one, the candidate is here and the president is somewhere else, where they're not debating each other. They're actually just answering questions from citizens that are trying to make decisions to vote. So with that being said, let's get our mindset right tonight. Let's get our mindset right. And so with our mindset, I am a BYOB master trader. I am the signal. All my trades in profit, I am 777. That's very important. Now, what are we talking about? And the way we're going to analyze this, the things we're going to talk about tonight, like I said, we're going to talk about the movement in the market. That's what we're actually about to go over, is movement that happens in the market. And as you understand that, you want to be in the right mindset. You want to make sure that you're not operating from an emotional standpoint. You want to make sure that you're operating from a standpoint where your mind is clear. Your mindset is clear, and you're not viewing any of this from an emotional standpoint. And how you do one thing is how you do everything. And I can guarantee you this is going to filter over into your everyday life. It's going to filter over into the way you think, period, because you are going to begin to remove your emotions and start to think through things. You're going to be able to do those things. And so, I just want to make sure, and that's, why should you have no emotions, especially while we're in a political market, is because you can't move the market. 95% of individuals make decisions based off of emotions, but yet 95% of the individuals are fighting for 5% of the wealth. So there's a correlation there. That's just what I see as a correlation. So you want to position yourself to where we're not having that. So that's why we sit, we come at peace, we say our affirmations, and we create the energy and the environment how we want to view the chart. We create the energy and the environment for the desired outcomes that we desire, the desired outcomes that we want to manifest within our lives. So as you're looking at that, I see economically unbothered. As I'm looking, I see, you know, I'm just seeing so many affirmations in addition to that. And I just really wanted to stress that a little bit tonight because I want you all to be in the right mindset. Now I'm gonna go ahead and share my screen with you, and we're gonna begin to talk about the BYOB cash out as well as what I just discussed. So if this is your first time on the call with us this evening, let me get a 111 in the chat, 111 in the chat. And if you are still learning how to cash out, let me get a 222. You still learning how to cash out? Let me get a 222 in the chat. All right, welcome, 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 and welcome back, everyone. Welcome and welcome back. Welcome and welcome back. All right, so now, welcome and welcome back. Quite a few of you are. So this is how this works. You know, let me break this down for you. In the evenings, on the evening calls, this is your educational journey. This is where you understand how to become the signal. This is where all of that begins for you. And then, of course, in the morning is where we actually navigate the markets, where we actually, navigate the markets, and we are showing you how to take those trades and showing you what to do. That's what this is. Now, right here, let's talk about the BYOB cash out. Let's talk about the BYOB cash out strategy. So it consists of 3 simple indicators, okay? 3 simple indicators. And in the mornings and even on these evening calls, you'll see that we're consistently looking at the vibrata, because what the vibrata does is it scans the market for high probability trades. Now, what you see on the screen right now are trades that we have been looking at, trades that, I mean, we literally were taking earlier. And this is, you know, this are the trades that we analyze. That's the trades that you actually see on the screen right now on the charts. So let's go back here and let's talk about the BYOB cash out first. I want to make sure everyone understands. Now, when you're looking at these charts, okay, one thing that I definitely, perfect practice makes perfect. So I'm going to stress your risk management. We talked about that on Tuesday. The one thing that we didn't dive too deep in, which we've talked about before, which is in that playlist, is your lot size. You know, we talked about that, your lot size, to make sure that you're compounding right. So you want to make sure that as you're monitoring this, you're growing your accounts properly, you're using that compounding sheet, whether you're going for 10 pips in cash out, or whether you're trying to take this up where you're going to exceed that, or you want to go a little bit further as you would have taken this trade. So you definitely want to make sure you're doing that so we can always balance out our accounts. You want to make sure that you're actually in a demo account first. So those are the things that we want to make sure that happen. Now, right here, blue line cross over the red and then upward momentum. Then I'm looking for a green candle with a flat top or bottom. Okay, so what we noticed the last 2 days while we were trading in the morning, one of the things we noticed is that we have overbought and oversold conditions. Now those overbought conditions are up here. The oversold conditions will be down here. What we're looking for is we're always looking for the stochastic to actually take this curve and go up. This is our leading indicator. So around this 20, you know, you got these numbers on the side of the chart. So right around this 20, and this 80 is where I'm looking for that crossover and cross up, or that crossover and cross down. That's what I'm looking for. Okay, that's very important. Now, when you start looking at trades and they're actually in that overbought condition or that oversold condition, that's when, right in the mornings, I'm telling you, okay, you want to monitor that. You don't want to just jump in a trade. As a matter of fact, is this one? This is one of them that was in that situation. This is one where when we were looking at this earlier, it was definitely in that oversold condition. When you know, it was called for a buy, okay, we took this trade from the harmonic scanner, and then we were also getting alerts for a sell from here. Now, this trade, with the amount of force that this had going out at that time, you know, we kept talking about watch it, watch it, watch it. So this is an example, and I'm gonna put a line here because I'm gonna drop down. And this is still me helping you understand the strategy at the same time, okay? when we drop down to the 15, so when you're seeing that, actually, what time? You know, I can't change the time on here, but I just, if I, it's somewhere, let's just move it a little bit. Now we were down here, and on the higher, we come back, we check the higher time frames, checking the higher time frames. Now you know that this is starting to get that little curve in it right there because it pulled up. So it's going, just like if you had a rope or something, even if it was hanging, once it started pulling up, you're gonna see like a little curve to it. But this morning it was straight down, okay? It was straight down. But if you know, like if the pretend like this was a rope, if it was a rope and I pulled it up, of course now it has a little curve in it, but this morning it absolutely didn't. This is the same chart, this is the same setup. I haven't touched it since this morning's call. I left this open, you know, so we can talk about this to see how it played out. This is that other line that we drew this morning. And so this is where, so, and this is why when I say, okay, you need to monitor that, because we're already in an oversold condition. This is why. You see, once you get down here around in this zone, it should turn around and go for a buy. That's what should happen. When you get up here around this zone, you're looking for this to turn and go to a sell. You got to have some strong market conditions and some strong market scenarios that's going to pull that in a different direction. You know, like if you see this point up and it actually reaches the 100 and it's still pointing straight up, or even 90 something and it's still pointing straight up, that means that there is something strong that's happening in the market, like the Brexit deal, no deal, like the stimulus deal, no deal, like the presidential election, the presidential debate, that's actually not a debate that's happening right now. So those types of things that can push the market, that will take it outside of that comfort zone or outside of that normal zone of where this would just keep pushing up. So like this morning, when you see this pointed down like this, and we're getting all these triggers and alerts, they were valid. The alerts are valid. And so you want to monitor that. That's why you always hear me say, monitor it, watch it, pay attention, don't jump in a trade. Because like when we came back up here on this higher time frame, what you're seeing is it didn't push through there. It bounced off. Like you see back here, this was back in September, and you can actually see where this bounced off and it began to pull back up. Now, what did we create? You know, because right now, a part of the BYOB cash out strategy, what we're talking about is, you know, we're talking about the stochastic. That's that leading indicator. So when it bounced back up, and so we had several hours where it went back into a buy, but when I look right here, it started pulling back. But where's my stochastic? My stochastic is around this 80. My stochastic is now pulled back up, and look at the momentum. You see how it pulled all the way back up, but it didn't go any further? The trade didn't rise all the way to the top. You notice that? So we got to the top, but this is as far as we went. That's something that also can tell you, I'm not about to ride this out. I'm not about to push this up. It's not going all the way up right now. So just want to kind of have you keep that in mind when we're talking about those trades in the morning. And and when you're trading on your own, actually, so you can actually see and understand what's transpiring. So now, let's go back over here to the one that we were looking at for the BYOB cash out. So now you understand, so why the stochastic is so important. I'm looking for that blue line to cross over the red and an upward momentum. I'm looking for that blue line to cross over the red and the downward momentum around the 80. Very important. Then of course, from right here, this is my leading indicator. These are lagging indicators. This is my leading indicator. These are lagging indicators. So it doesn't matter which one happens first, okay? It does not matter. Now, you notice that right here, this is where I got my flat bottom candle, and my piece are already flipped. So from the time we had the crossover, we had to, honestly, this was like an hour before you can get into this trade. That's okay. I want you all to be comfortable with that, because think about it, you know, you wait, I'm gonna say it. You wait 40 plus years for your retirement account. You can wait to 15, 20, 30, 45 minutes, an hour for your trade to manifest. So now we see right here where it's aligned. Now I want to drop down to the 5 minute. When I drop down to the 5 minute, when we can find the 5 minute, I didn't know it's not over this far. I didn't think so. I know, because it's a 5 minute. We were over a little bit. Here we go. This needs to still be buying. Now, this needs to be buying. Now, you notice that it had a nice little pullback after that spike. That was a spike. Now, and that's typically caused by some sort of news. Now, that's when this has to be, I believe, when they agreed to extend Brexit. So extend, because today is actually the deadline that they had to make a decision. So now that's that news spike, but then they pulled back down. But because of the momentum that was in there, so you see that we actually got the curve coming back up. Now, of course, don't look at any of this because you didn't see any of this, right? The only place we were looking was right here. Now, when you see that pulls back up, and then I need to go to my hour. My hour needs to look like a trade I would take. It needs to look like a trade I would take. So it's that a setup for a trade. Now, why? The higher time frames is what moves the market. The higher time frames is what helps you understand the direction of the market. The lower time frames is where all the activity happens. Now, this absolutely does look like something I'm waiting for. And now, this is why I tell you guys, don't overanalyze it, don't overthink it. Okay, don't overanalyze it, don't overthink it. When I drop down to my 15-minute, when you're looking at this, you know, we just talked about you waiting for that trade to manifest. You waiting. Now, if I'm looking at my hour, this honestly is what my hour looks like. But I get questions all the time. Well, do I need a flat bottom? Do I need this? Do I need that? You know, or just asking questions about what it should look like. If you know that you would wait on this trade, you're waiting on a flat bottom right here. So you know I have remember they're all different. They're never gonna play out the exact same way. So I have my stochastic here, and when I say they're all different, they're not gonna play out the same way. And I'm just moving this over so you can see, that simply means what comes first, the degree of the curve, right? How does that happen? So when I'm looking at this, you see that this has a wick pulling out, but I got my PSAR flip first. That's okay. Now, as I'm seeing this, one of the things that you notice is the simple fact that I had to wait. Now, all of you know to wait on this. Anybody that's not a 111 and on here for the first time, you know not to wait on this. I mean, you know to wait on this. You know not to take it right now. You know to wait. And because you know to wait, you'll sit there and hey, take a look at GBP NZD. I think it's about to set up. I think it's getting ready. But then when you get to this screen and we're saying that needs to look like the same way that looked like a trade that I was waiting to set up, that looks like a trade I would take in a minute, you get right here where this arrow is, and then you start, oh my goodness, is this confluence? And what is this? Is this what it should look like? Doesn't it look the same? Doesn't it look the same? It looks the exact same way. So this was what that means. This is what that means. So this helps you understand confluence. It looks like a setup. It looks like a trade setup that I would take in a little while. And I don't need it to be a stochastic, a flat bottom, and a PSAR flip to the bottom. I don't need it to be that on this time frame. I'm not trading on this time frame. I'm checking the hour from the 15. I need it to look like a trade that I will take in a minute. That's the confluence. It's feeding into that hour. So that's what you're looking for. That's what you're looking for. So hopefully that clarifies some things for you guys. Hopefully it did. Now, this triggered, you know, this was still buying and it was still triggering over here. And so just to kind of help you understand a few things, because you really want to understand now, even with all the news and everything that's happening, you notice that our trades, the BYOB cash out, it still lines up. It's still in order. It still happens the way it should happen. Okay. So here I am on a 15-minute chart. Here I am. Now you notice this is what I want you to see. Notice that what's happening on my 15-minute chart. Look at my stochastic. And then it comes up here. And then you see when it gets up here, that overbought condition, I get some pullback. So this is where my pullback is. So we'll mark it right here. And then when it pulls out of that pullback, when it starts pulling back up around here. And you notice that this is where my candles begin to pull back up. So all of this is on the 15-minute chart. But if I come to the hour, which is probably where I should have marked it up. But when we come to the hour, all right, I want you to look at something. Where do we get pulled back on the 15? At this first line. Now, look at what happened. Look at what happened with my stochastic. My stochastic is curving up on the hour. So you see I'm going up on the hour. And then when I come to the 4 hour, look at what's happening. I'm moving up. Now, I'm gonna change the color. So when did my 4 hour get here? I'm changing. So my 4 hour I probably should pick a different color. All right. So my 4 hour got to the top right up in this area. And you see that even if I put it here, it doesn't matter because that's where that crossover started. So right up in here with this 4 hour candle, okay? Because we know we started to get some curve. We know we did as this began to manifest into this sale. So we got that blue line crossover the red and the downward momentum. So you see that this range, this is how far it went up. Yes, our official take profit 3 was up here, but look at my 4 hour candle. My 4 hour stochastic. Look at how it rolls right there. So you see that this is the duration. So everything that transpired on other time frames happened between here. My higher time frames dictate the market, where it's going. My lower time frames are all the activity and the movement. And then when we drop back down, look what happened. When we drop back down, look what happened. You see it's moving up. We get some correction, right? It's pulling. We got a little sideways activity. On a 15-minute, you get all this momentum. So when it comes up here in a 15-minute, it has to come back down. So we're getting pullback. When do we enter the trade? After the pullback. So when we get the alerts, we enter the trade after the pullback. We always go check our higher time frame and we see what our higher time frame is doing. Now, when do we get in the trade? After the pullback. We get into the trade after the pullback. So, when you see it and you're looking at it and you're like, can I take that trade? We get into the trade after the pullback. And so now you can see, so I get to take profit 1 real quick and easy because I'm aligned up on the 1, I'm aligned up on the 15, I'm lined up on the hour, Look at how nice and smooth we went up to the hour. So I got to my take profit 1. Now I got to take profit 2 a lot quicker. Well, not a lot quicker than 15, but a lot quicker than the take profit 3 because my 15 did its correction. My hour is still moving up. And you see now we're at take profit 2. Now take profit 3, that's a whole nother story because what has to happen on my 15, look how many cycles we have to go through. So now my 15-minute has to go back through its cycles. My hour needs to go back through a cycle before we could even consider moving up. But now this has already changed because this is as far as it went on the 4 hour. So this should actually help you understand because a lot of you ask, well, how do I know if I can go to take profit 1, 2, or 3? And what do I always tell you? Go to take profit 1, go to which is that first important resistance line. That's your take profit 1. You can trade there based off the 15. Do not exceed that do not go past that until you see where, when I'm looking at this, right? Do not go past that until it's aligned on a higher time frame. And so now you know why. Now you know the why behind the what, the why behind the statement. You don't go past that until my higher time frames tell me I can. So I don't go past that. So we just answered 2 big questions. That first one, aha, I see it. That's an aha moment. So now, and when you're looking over here, we know that we could not go further than this, right? We could not go further than this because of where we were. We're in that significant oversold position unless we had some significant market conditions, right? So, okay, great. Yes. So we had some significant overbought market conditions. So now you see how it pulled back up before it pulled back down. So we know that this was not, we had already reached the bottom for the hour and the 4 hour. We had already reached the bottom. So we need something, or we have to wait for the correction and wait for that pullback before it does anything. Now, market conditions can actually shift that and change that. It can. But, this is our technical analysis, and this is really what's going to help you understand. So unless it's something extreme, like the things that we were talking about, unless it's something extreme like, the political situations that we just talked about, it's going to follow this. That's why we tell you that this is no guesswork involved. All you have to do is build this relationship with the market. That's all you have to do is build this relationship with the market. And when you build that relationship with the market, you'll actually know that market and you'll understand that market. Okay. So that's what you want to do. And so don't try, this is why we always say, don't try to memorize. Don't try to memorize everything. When you try to memorize everything, then that's actually that's where you're trying to be so spot on and so to the T that it's not going to work. You want to understand it, because the market, it moves different. These are real currencies. These are real trades that people are taking. You're just looking at it from a different perspective now. People are really buying currency. They're really selling currency. And so when you compare it, when you put these two currencies together, you notice that when we look at GBP USD, GBP NZD, GBP JPY, that might be different than GBP CAD, you know, because it's all about the currencies it's compared to. It's always about the currency that it's in a relationship with. So you can't just look at it and say, oh, this is how it's supposed to go and what it's supposed to do. Just like I showed you, with the ones of you who asked me that question about the hour time frame, you're trying to memorize. When we were over here and we were talking about when I go to the hour, how this looks like a trade that I would wait on, but on the 15-minute, you know, you don't ask that question on the 15-minute. You sit there and you wait on the flat bottom. You sit there and you wait on the flat top. You sit there and you wait on it. So if you were understanding, you wouldn't ask me that question here. If you're understanding, but because you're memorizing and you're trying to memorize it the way we've been conditioned in life, that's why you ask me that question there, because it's no different. It's really no different. So it's if I am waiting, this has to look like a trade I would take in a little while. So it's gearing up. So if my stochastic was pointed straight down, even though I had a green candle and my stochastic was pointed straight down, is that a trade that I would be ready to take? No, that's like divergence, not confluence. That is separating. Divergence is when it's separating. We don't want that. We want confluence. We want it flowing together. We want it collaborating. You know, that's what we want. Questions, comments, testimonies before we keep going. Questions, comments, testimonies. All right. So no questions, comments, testimonies. We just got an aha moment. An aha moment. Awesome, awesome, awesome. Phenomenal. So I love the aha moments. So now, because that means that you'll have a testimony when we get back on the calls next week. So this is a trade that we took as well. So this is one that we looked at that was called from here, and it was on the harmonic scanner. So this is one as well. Now this one had a nice bumpy ride, but you see it still did what it was supposed to do. We're almost at take profit 3. Just for curiosity, did anybody take this trade? 777 in the chat. Did anybody take the trade? We looked at it this morning at 5. This is that setup. 777 in the chat. This is why we're doing this. This is why we're doing this. Okay, I'm like, okay, there you guys go. So your pip reaction time a little slow, but that's okay. I'm just messing with you guys. So now, so when I'm saying this and I'm pointing this out, is I want you to trust yourself to take those trades. I want you to trust yourself to analyze and get into those trades. So when I look at this, like this was from this morning. And when you look at what happened on the 4-hour, now you can see it because this was a trade that we marked up from earlier with the harmonic scanner. Now look at my 4-hour. My 4-hour still has room to buy. When I look at my 1 hour, because this is where it pulled from off of the harmonic scanner from the 1 hour. So wait, so hold on. When we looked at this from the hour, you can see that we got pulled back and then it kept going. And now we're in that overbought condition. We're in that overbought situation. So, and now you can see where we are. So we're not going past this right now. We will have to wait for the correction before we keep going. So my 4-hour sitting there tells me it looks like we probably will keep going. But right here, because I'm so overbought, I need to, and get in that territory, I want to wait for my correction before I turn around and take that trade. So you never knew you were supposed to take the trade that got alerted after the pullback. Absolutely. So that is what this does. So let's look at it. That's a good question. That's what tonight is all about, that training. It's about the training and the mindset. So you see we're almost here at this take profit. And I don't know, where's mine? I know I had it written down. 314. Yes, that is actually the take profit 3 up there. So that is actually the take profit 3. So you see, you don't take it right now. Please don't take it right now. Please don't take it right now. Yes, you have to wait for it to pass that line. You have to wait for it to finish. You never get in a trade prior to here. You never, ever, ever get in a trade prior to this right here. You don't want to do that. You always need to wait, okay? You need to wait. You need to let it push through. Even when, like when we're on the call and we're talking about the indices in a zone, you want to, on a, you know, regardless of what you're trading, you need it to push through. I need this to manifest. I need this to push through. So now you understand what it's doing. When you get to support and resistance lines, we get our pullbacks, we get our corrections, and then it will push through. So that should have brought a lot of clarity. Now, let me pull this up. Let's analyze what you're talking about, because this was another one that we took as well. Okay, we're going to talk about what you're talking about. So this is another one that we took too. So you notice this morning it was more like it was up here. And so we kept getting alerts and triggers for a sale. And you see how we were already down here in this getting in this oversold. But what are they having right now? That EU summit, what's going on? You know, so much political news and things, but you notice that it did stop at the support line. So it did push, but it did stop at the support line. So these are actually correct. So this is one from this morning as well. Every trade that we're talking about happened to be from this morning. Now, to answer your question, and all of these were alerts that we pulled from here, or the ones we pulled from the harmonic scanner back over here. So what you're seeing is the vibrato at work and your skill set, you being the signal. Now, I've been trading, let me see, this is why I always take in the, let me see, I want to see this one. I've been trading the pullback and the opposite of the call. Oh, so what you're doing is counter trend trading, basically. That means you're not doing, are you doing your time frame confluence? Are you doing your time frame confluence? So just wondering, are you doing your time frame confluence? So yes, no, maybe so, sometimes. Okay, so let's go down here, because I'm gonna show you why. If you're looking at this, I'm gonna tell you more than likely you're not, or you're going back to the older ones. So let's just go ahead and click this one right here. Let's walk through some of these. Let's walk through some of these. And maybe I'll pause it and we'll look at some old ones. So right here on the 15-minute chart. Now, this is calling for a buy. This one happens to already be pulling out of that buy, right? This one is already pulling out of that buy. Now, this much as far as the correction. So we're going to put the call price on there. And for understanding and clarity, okay? For understanding and clarity, let me drop this on here. 182211. Drop this right here. Now, when I come up here to the hour, you see how my confluence is an hour? When you check your confluence, it's always in that, going in that direction. So I'll say 98% of the time, because every now and then you'll have those market conditions that it'll shift or what have you. So I'll say in a 90 percentile that when you click this, you know, actually I want to keep my 98%, but when you click this, you see that this, my confluence chart, my confluence time frame is in a buy. Okay, my confluence time frame is in a buy. So more than likely, this would be in a sale, but sometimes it's like this, but you see where we are. If it's not in a sale right now, it's coming into a sale soon. Now, the ones on the higher time frames, they're going to be more in a correction. Like, I don't want a 4 hour. Do I have an hour? Because a 4 hour, I would be looking at the daily. So I'm pointing out to you that those trades will probably take a little longer for it to set up. So, which is fine. It's just your trading preference. So Euro GBP, you see where we are. You see that this is called for a buy. So if I check my 4 hour, actually this is the trade we were just looking at. You check your 4 hour, you can see how this one was called. It called for a buy. but on my hour, you can see we're in that overbought situation and overbought. So it's always caught in a correction. So didn't I just say that this probably was going to correct before it goes back up? So now you definitely can see how this works on that time frame as well. So of course, the 15-minute is not going to take as long as the hour to go through the correction cycle, what I just showed you at the beginning of the call. So the 15-minute is going to go through its correction cycle when you get these. Now, on the 5-minute, when I'm looking at the 5-minute, now, of course, you're going to have a lot more, okay? You're going to have more, and no, these come out of the correction a lot faster because why? It's all the activity. It's where everything transpires. You get a new candle every 5 minutes. Okay, so 1, 3, 2, 2, 2, 2, 0. All right. So right here, you see where we're right here, and this one was called 17 minutes ago at UTC time 120. So we're gonna come over here, and we're gonna grab this UTC time 120. That's the UTC time right here. So this triggered right here, USD CAD is triggering for a sale. Now when I go check my 30-minute, which is where my confluence is, what is that candle on? What is this candle on? This candle is on a sale. That's why it triggered. Now, do I take a sale? This is where your analysis comes in because this is what triggered it. You notice my stochastic is crossing over. I got a nice red candle, but because of the market conditions we're in, I always come check the higher time frames. What is it doing? Look at what my hour's doing. Look at what my 4 hours doing. Both of them look like they're gearing up. This stochastic has started curving here, but this is a green candle, but we got some rejection going on. That's a strong rejection right here. We have some rejection that's happening right there. So it looks like it's actually gearing up to come back for that sale. But I'm not trying to take, you know, you look at this, it's actually starting to buy right now. So do we take this trade right now? Absolutely not. Remember, these are not signals, okay? They're not signals. So if you are trying to get into a trade right as soon as it's called, right then absolutely, you looking at the correction. Like this is 17 minutes ago, and you can see where it was pulling up or what have you, but yet it's calling for a sale. So if you're just trying to jump in as soon as it alerts, then that's why you took this trade. The thing is though, I'm gonna tell you, because there's no confluence on it, it's not in alignment, you know, when is it? Am I going to get my pips? Am I not going to get my pips? So understand the strategy's back tested at a 92% accuracy rate, and it's back tested without time frame confluence. But you need to know if I'm counter trend trading or trend trading. Okay, you need to know that. You need to know your pip reaction time. Like when I asked how long, you know, how many of you all were in that trade, it took a minute before those 777s came through. That's what you call pip reaction time. How long does it take for you to get into the trade? How long does it take for you to react? How long does it take for you for that to happen? Like, how long does that take? So right now, you look at this. Yes, I had a blue line cross over the red and upward momentum. Green candle with a flat bottom. PSR flip to the bottom. Absolutely. But that's only 4 pips. It looks like a lot, doesn't it? But that's only 4 pips. So I don't want to take a trade. I don't want to take a trade that I know is obviously in a correction and counter trend trading, unless, you know, everything begins to shift and the market starts to turn around. But that's when you want to take a trade. But you also don't want to jump in a trade because it says sell. You don't just jump in here because it says sell. I need to do some analysis and wait on that correction to happen. All right. That's what you need to do. And then it works on everything. Right now, this is USD. I mean, not just you in particular. I'm just saying it because this, you brought up a topic, you brought up a subject, and so this is very adamant. It's very relevant. And so every morning, more people have those questions. And that's why we always ask for questions, comments, testimonies, because your questions bring clarity. You know, your questions and comments bring clarity so you can manifest into those testimonies, okay? And so that's definitely, you know, the thought process as far as that's concerned. So you definitely see this, right? You definitely see this. Now, this is USD. I'm gonna tell you right now, we're not looking for any trades right now. I mean, if you take some trades and you see them, I'm gonna tell you to take them, but as far as looking for a trade, for the most part, the debate, town hall style debate. I don't know who they're debating because they're not talking to each other, but you know, the town hall style debate is what's happening right now. And so the market is watching the debate. We are watching the market. You see how that works? The market is watching the debate. We are watching the market. That's how that works. So now let's see here. So if I come here like this, your US 30, because I get these too. Now, I just told you to watch them. I didn't tell you to take them right now. So, okay. Told you to take it right now. So let's see here, 2855, 553. Now these are points and not, these are points, these are points, these are points and not pips. So I'm gonna come, this will actually happen at 115. Please explain continuation. So let me see, 115 right here. Now, same thing, US 30, okay? Now, I'm gonna tell you, GBP, we can use a different time frame because of the amount of liquidity in there. Well, this US 30, you can use it too. You know, you can do this too. So you see right now it's flat, right? Because of what's happening right now, okay? Because of what's happening right now. So candidates are answering questions from US citizens. So eligible voters, they want answers right now. And so that's why it's flat. You see this is just flat. Now, but what I'm showing you is you see how this corrected and then it starts coming back up and you start seeing this pull into a buy. So normal situations, you know, but what type of market do we have? We have a political market right now. So you see where this is pulling up to a buy right now, and you want to check your confluence, and you definitely see this, but look at my stochastic, right? My stochastic is not pushing up with it. So you see the market is just on pause. It's on pause right now. So because it's waiting. So, and we're on this call, so I don't know if it's done or not, but I know it was on when we started. So, and now I got a question that says, can I please explain continuation? All right, that's a good question. So let's talk about it. Let's find one. All right, here we go. We'll use this GBP right here. Actually, I want something smooth. Am I gonna be able to get something smooth? Not with GBP. I'll get it with an AUD pair because I want to be able to explain it to you. We're gonna use this drop right here. All right, so here we go. This is a perfect one. What is continuation? So the market right? The market goes down, it goes up, and it goes sideways, okay? The market goes, that's part of the downtrend. Is it kind of sideways? But let's bring it over here. The market, come on. Okay, so the market goes down, it goes sideways, it goes up, it goes sideways, it comes down. You know, it's just that continuous cycle. So now, when it begins to move, you have what's called impulse, okay? This is what happens, you have impulse. So that's that move down, okay? So I'm moving down. It's coming out, well, this is coming out of that sideways motion. We got our retest. So I'm gonna bring it down here for you, okay? So I'm gonna bring it down here. So you got that where the market's coming out of there, and we got that impulse move, because that's from that sideways motion, retest right here. Now we got that impulse and that impulse is really just like that first move. Continuation and impulse is the same thing. So impulse, correction right here. This is a correction. So, and this would be what you were saying you were trading. You know, if you are trading, if you're trading this for a buy, you're counter trend trading because the market is in a sell. This is clearly a sell right here. This is clearly a sell. Now, these moves that pull back up, this is where you would actually be counter trend trading. So when you hear me say you're counter trend trading, that means you're trading against the trend. The trend is your friend, but some trades get alerted, but you always need to know if you're trading with the trend or if you're counter trend trading. You never, ever, 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 ever want to try to, we talk about 10 pips and cash out, those types of things. You notice that you don't ever, if they line up, don't ever take it past that first support line, resistance line. Don't ever, I'm just going to tell you, get your 10 pips and cash out. You're counter trend trading, but you need to know you're counter trend trading, because some of you all will not touch a counter trend trade. You won't touch it because you know that you don't know when it's going to turn around. So, but I know some of you all do counter trend trade. So that comment was for those of you all who do that, because perfect practice makes perfect. And you always want to know where you are in the market. So that's impulse, correction. Continuation is when it starts moving back down. That's continuation. So impulse, correction, continuation. Then the market corrects again. Where you see it's pulling back up, that's a correction. And then you see continuation, right? That's what that is. So continuation, simply to just really just as clear as possible, continuation is the market is just going back into the direction that it was going. So it's continuing on its journey. It's continuing on the process. We had a little pit stop right here, and now it's just going to keep going where it was headed. Oh, we have another pit stop. Imagine you're traveling. These would be those bathroom breaks, or those breaks where you need to go to, I'm traveling in a sale. But this, you guys need to stop and get some food. You all need to stop and go to the bathroom. You all need to stop. What stop for? So hopefully that'll help you. But that continuation is when you get back on the highway and you keep going. So the same thing. So the market got back on track and it kept going down. So hopefully that brings some clarity to your question. Okay, so that's what you've been doing, 10 pips and cash out. But recently you've been taking your trades only with the trend, and you win a lot more often. It just takes more time to develop that. It takes some more patience because you have to wait for this to come back around. So that's what you're waiting for, it to come back around, and you're waiting. Now the vibrato is gonna alert it. It's gonna alert it both ways. It's gonna alert you here, it's gonna alert you here, it's gonna alert you here, it's gonna alert you here. You know how we're on the call in the morning and you get a lot of alerts? You see the alerts that keep happening? Well, because the vibrato is gonna alert you. So, the vibrato is going to alert you. And so you notice it's like AUDJPY just alerted. Oh, it just alerted again. Okay, in 30 minutes, it alerted again. In an hour, it alerted again. That's because it's traveling with this trend. It's traveling with this. And so it's giving you right here, it would alert right here. It would alert right here. It will give you an alert right here. It will give you an alert right here. So it's traveling with this trend. And so it's telling you all these optimal entry points to sell along this journey. Okay, that's what it's telling you. But then when you get down here, you still get an alert, because the vibrato is not human. It doesn't tell you. So this is like when we got that alert earlier today down here. The vibrato is not human. Okay, and because this is that. So you had alerts here, had an alert here, had an alert here, but it's not human. So this was a valid alert. This is where you come in, you bring your analysis in, and you have to know where you are in the market. So you really have to understand where you are in the market. So if I'm up here, I can keep taking these trades. And then, when you get down here, it's like, okay, it gave me an alert, but where am I at in the market? Where am I at? Where am I at in the market? Okay. So I think that helped a lot of us. A lot of us. You are so welcome. Thank you. Please explain the stochastic in relation to its continuation. Ooh, that took about 20 minutes in the beginning of this call. So we got about 5 minutes left. So this will be up for a recording, hopefully by tomorrow. And the very beginning of this call is where we went deep into that. That's what the beginning of this call was. So where you can see that. So when it pulls back in the different time frames and things like that, we talked about the 15, the hour, the 4 hour, and how they all flow together. And when it shifts and changes, you know, how it's going to go into that correction phase because of where the stochastic went to. So the playback will be able to help you with that. And maybe, and if it doesn't, let me know, and we can start the call with that again on Tuesday, because Tuesday is basics. And so part of the basics, I really want to be able to bring some clarity to some of the market conditions as we walk through the BYOB cash out. So if it's in a downtrend and it can cause for a buy, it's a correction. Absolutely. Absolutely. You know, as we looked at this, absolutely. This is a downtrend. This is a correction. So that's why you need to check your time frame confluence, because even if I put this right here, let's show you. Let me put this right here. All right, let's look at my higher. Oh, we're on the hour. Look at my 4 hour though. Can we even see that thing I just drew? Look at what this the box I just drew. Maybe I should change the color. Okay. Can you hear me? Yes, no, maybe so. Okay. So I'm gonna go ahead and we're gonna have to transition the call. I've definitely Zoom kicked me off, so you don't have my screen share anymore. So but questions, comments, testimonies real quick, just